Hello, my name is Ben Decker, and in this video I'm going to go over the first of the 44 series hedges called the 441. So before I get started, just a quick disclaimer that this is not a trade recommendation, and you and only you are responsible for any trades you put on. Before putting it on the trade, you should understand the risks involved. So this 441 trade that I learned from Uncle Tony. I'll put his link in the YouTube description. He puts out weekly market videos that I think are worth checking out. So the 441 hedge is to protect your portfolio and is a way to get long the market at much lower prices than what they're at now. So I'm going to use SPY, SPY, the S&P 500 ETF. So go into the trade page here with SPY. Typically you want to go between 30 and 60 days to expiration. So I'm going to go with April 16th, that's 45 days. So go in there. So to start out with this hedge, you want to do a $5 wide put spread and do it for a $1 debit. So for this one, we're going to go up until we find about $1. So that's a 373, 368 put debit spread, and I'm going to buy 4 of them. So this is a low probability debit trade. I'm going to finance it with a short put. So I'm going to find the put that's going for $4. That's about the 358. I'm going to sell 1 of those. So this is the 441 hedge. I'm buying 4 of the $5 wide put spread, and I'm selling 1 put out of the money to finance that. And I'm doing it all for a credit. This trade takes just over $5,000 of buying power. And when you put on this trade, you want to, worst case scenario would be to get assigned on this 358 short put. So you should have the capital in your account to take 100 shares of SPY at 358. Now let's look at the risk graph here. So if we go into the curve mode, click the analysis button here, we can see our trade. So as you can see, we have no upside risk on this trade. If the market goes up, we keep our 15-cent credit. On the downside, we have this little tent here. So the peak of this tent is a $2,000 profit, and that is between our 358 naked short put and below the short put of the debit spread, which is at 368. So we have a $10 window here where we can make $2,000. And as you can see, even though our short put's at 358 here, our break even is way down here at 338. So if you were to get assigned on this 358 short put, your cost basis is actually at 338. So this is a good way to get long SPY 100 shares at a really low cost basis. So if we go to a chart just to take a look at that, I drew in some lines here. So here's your long put spread. Here's a short naked put, and then here's the break even. So 338. So in this case, we would get long at prices back from November. So this is a good trade to hedge your overall portfolio. Intent is to hold this until expiration, and if the market falls, to take 100 shares of SPY. So like I said before, make sure you have enough capital to take assignment. You could also close this trade completely before you get assigned as well if you don't want to take 100 shares. So that's the first of the 44 series hedge called the 441, kind of the original trade here from Uncle Tony, like I said. If you like this video, hit like and subscribe, and I'll do some more videos on some modifications. Thanks.